This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September 21st, 2012. Our time is 8:47 Mountain, and that is 10:47 Eastern. Radio show runs QR77 Calgary. Also in Edmonton, 630 CHED, and AM 640 in Toronto. If you ever miss a radio show, they are archived on Harold's websites, HESradio.com and RareColoredDiamonds.com. We also have a podcast through iTunes. You can subscribe to that. Take our radio show anywhere you go. We are portable. Today, as we tape our show, gold and silver up heavily due to talk about Spain working on a bailout this weekend. Also during the week, more geopolitical trouble, this time between Japan and China over islands. The Iranian and Israeli situation continues. Also, the United States and their embassies continue to be under siege. And a little later in the show, we're going to talk about the Golden Cross, which is a technical analysis term for gold and silver. The Golden Cross is here for gold and silver, Harold. We're seeing some major moves today in the markets. It's very, very exciting. As we said last week, we hope people have positioned themselves for QE3 and what we're seeing in the marketplace right now.
You bet, Randy. And again, it's very, very bullish for the market. But the market had moved up so much so quickly in preparation for QE3 because the markets always tell you in advance what's going to happen. We wanted to see some profit taking short-term in gold and silver. We got a little bit of that this week, but now as we're taping the show Friday, the gold and silver markets are up very, very strong. Gold's up $17 today. We're trading at $17.80. Silver's up 40 cents. We're trading just over $35. Oil's up $1.10, trading at $93.50. The Canadian dollar's been very strong. We're trading at 102.5, almost 103. That means when you convert your Canadian dollars to American dollars, you're actually picking up 2.5 to 3% at this particular point. The metals right now are building a base for the next major rally that I believe is going to take gold and silver to new highs. So basically what we need to see short term is that gold break above its minor resistance area of 1,800, which is only $20 from here. It could do that any day. The major resistance for gold will be at 1,900, which was the old highs. So it could and we'll reanalyze it at that point. There's no doubt that gold's going higher than 1,900, but once it breaks above 1,900 in the futures markets, there's buy orders above that level, and once those orders get hit, the market starts to escalate, and that'll take the gold market to 2,000 to 2,200, and that could happen before the end of the year. Don't forget, it was just a couple months ago the gold was trading at 1,500. We're now almost at 1,800, a $300 move, and now we're looking that gold could literally end the year at about 2,000, which would be from 1,500 to 2,000, a $500 move in gold this year. In my opinion, that's pretty outrageous. The silver market, the same. We saw silver go all the way up to $50. And in silver, what we need to see short term is a break above $38 and a couple closes above that. Two closes above $38 will signal that the market is going higher. And even though silver is way below its $50 high, for silver to break above that or break back to $50 is really not a difficult thing. So what's happening right now is that the markets have moved up substantially. They pulled back this week on profit taking in the futures market, but they hardly pulled back enough to make a major difference. So what it's showing right now is that it's building a base for the next major run up in gold and silver, and I believe that's going to take gold by the end of the year to about $2,000, and if we get the moves that we're looking for, silver could get up to 50. Let's not lose sight of the fact that what happened the last time the gold got to 1,900 and silver got to $50. That's when the exchanges in Chicago and New York raised the margin requirements ridiculously 5 times in 1 week in order to slow down the price of gold and silver. Again, when we get up to $50 silver and we get up to $2,000, $2,200 gold, obviously we're going to reanalyze, see what's happening in the market at that point short term. However, it's extremely important that we understand what's really going on and why we need to be in the hard asset market. And it's primarily because of inflation. I know inflation does not seem to be in the news at all at this point. But there's absolutely no doubt that every market is an action-reaction market. Something happens, and then there's going to be a follow-through. And that's exactly what happens with quantitative easing. When the governments or the Federal Reserve print so much money to put back into the system to try to spur jobs and try to spur the economy, what they're really doing is saying, we're gonna put a Band-Aid on open heart surgery. What we're doing is we're going to slow down the problem at this point until we can figure out how to handle it down the road. The problem is that they're printing so much money and it's reducing the currency so tremendously that what it's going to lead to is massive inflation. And we know that because we've seen situations like this happen, and that's the action-reaction that I'm talking about. When you devalue your currency, eventually you're going to have to pay the price for it. And let me explain that to you in the most simplistic of terms so you understand exactly what I'm talking about. With the United States dollar, when they print more and more money, that reduces the value of the dollar because there's so much more of it out there. It's just like, for example, with grains or with oil. When they have a bumper crop in the corn, wheat, and soybean markets, there's so much of it out there that the demand is not as high as the supply, so the prices go down. So when there's an overabundance of a commodity, the price always goes down if the demand is not there for it. The same thing with oil. If they're producing so much oil and the world cannot use all that oil, the price is going to go down. It's the same thing with the dollar. And that's exactly what's going to happen. The Federal Reserve is printing so much U.S. dollars in order to do quantitative easing 3 and pay off their loans of $15 trillion, which they can't even afford at this point. What that does is lowers the value and the buying power of the U.S. dollar. At a time that oil prices are at almost record prices, food prices are skyrocketing due to one of the worst droughts since 1980, and basically the cost of living is going up as their dollar is buying less and less. That's why inflation is going to be the major problem that eventually is going to raise the price of gold to levels that most people have never ever dreamed of. We've talked about the potential of gold going to $5,000, but again, as the market hits new highs, you have to sit back and reanalyze where the next moves are going to come. But I've never seen a better situation than we're in right now for hard assets like gold and silver and diamonds, because those are the 3 markets that respond to exactly what we're going through. And this is not a short-term situation. This is something that will last for at least 5 years. So if you're not in the gold and silver and diamond market, if you don't have a hedge against inflation, let me explain to you what could happen. Let's say, for example, your family makes $50,000 a year. And out of that $50,000 a year, you pay your mortgage, you pay your car payments, you pay your food, you pay your taxes, you pay everything, and whatever is left over is your savings. And you try to live within that realm. Now, all of a sudden the price of oil goes up, and now you need more money. And now the price of food goes up. And the price of commodities and everything is going up, but you're still earning $50,000. And now because the cost of living is going up, it's now eating into your savings. And that's when we start to panic and say, oh, my God, what are we going to do? The bottom line is that if you don't own the type of assets that go up during inflation, which is gold, silver, diamonds, and oil, those are the 4 markets that you should be in at this point. Because if you make $50,000 a year and you own some gold and silver and diamonds and oil, and those are the 4 markets that are going up, that's how you hedge against inflation. And that's what we've been saying for the last 11 years. You need to own gold and silver physically. You need to own diamonds for very specific reasons that we're going to talk about later in the show. And you've got to invest in oil because oil is going to go to $150 to $200, and that could happen by next year. So the bottom line is that those are the fundamentals of what are happening in the marketplace right now. Randy mentioned some geopolitical situations that are quite scary. China and Japan are really going to go at it. That's a very strong possibility. But the biggest problem in the Middle East right now, believe it or not, is the talk between Israel and Iran. Now, I've got friends in Israel. And in past, I've used them in order to find out information. How are things looking in Israel? Are people getting nervous? Anything like that? What is the government saying? And basically, up until this week, they've been saying that they don't see anything, that there's no real problems going on and everything in life is the same. But all of a sudden, one friend called back this week and said things are changing here. They're getting concerned and there's troop movement. So I've heard that from other people. But again, I wanted to hear it from the people that I know. And the fact is that things are starting to heat up in Israel and Iran. And if that does happen, which is something that we did feel would happen by the end of the summer, you could see oil prices go to $200, $300, and $400. So again, if you want to talk about inflation, $200 oil, the worst drought since 1980, and the fact that dollars are being printed like crazy, that's the stage for massive inflation, and that's why we need to be in gold, silver, diamonds, and oil. Those are the four markets in 1979 and 80 that made the biggest moves because of inflation. Gold went from $125 all the way to $850. Silver went from $1.25 to $50, and oil skyrocketed in price. And diamonds, colored diamonds primarily, went up 500% in 2 years. That's how you hedge against inflation. That's how you protect your family's assets against being eaten up with inflation, and that's what we need to do at this particular time, Randy.
Well, you know, Harold, in today's newsletter, and I would encourage people to get the newsletter from Harold or Worldwide Precious Metals. Give Worldwide a call, 1-866-623-2002, or speak with Harold, 1-800-432-1022. We have a chart, gallons of gas purchased by an hour of work, and the American paycheck buys half as much gas as it did 10 years ago. So yes, there is inflation. The one company Harold recommends you use when it comes to investing in precious metals, Worldwide Precious Metals, a Canadian company, Western Canada based out of Vancouver, been in business 10 years, the full time of this bull market. They've been through all the ups and downs. They're the experts in this very specialized field. They're there to help you maximize profit, minimize risk. Since 2001, gold and silver have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money, as we see with buying gasoline. And that's why we're saying stop the destruction of your paper wealth by investing in hard assets. Gold, silver, diamonds. Turn paper assets into hard assets for real wealth. Learn more. Speak with Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Their website, wwpmc.com. Now, I had touched on it earlier in the show, and this week's newsletter is a must-read. I know that the diamond section of the newsletter, one of the best that we have put together. It is simply stunning, and our featured diamond, we'll talk about it later, is another stunning, stunning diamond. Get the newsletter because we have two stories that are must-reads, and everything actually is a must-read, but in particular, there's fundamentals and there's technicals when it comes to investing. We pretty much follow fundamentals, but the market is driven by technicals. And there's a term called golden cross, and I'll explain it to you. It may signal big moves ahead for precious metals. The price charts for gold are approaching a golden cross, in which the 50-day moving average surpasses the 200-day moving average, which suggests the start of a major, major move. We have one story on that in two charts, and we have another must-read story. John Bollinger, who's the president of BollingerBands.com, said in January that the Golden Cross is a great tool in a big, roaring bull market like the bull market from 82 to 98, when it tells you when you're supposed to be in the market, and it tells you periods when the risk is somewhat higher of corrections and such. Gold and silver are in such a secular bull market, and the combination of these long-term bull markets and the recently trending higher markets and the Golden Cross is important technically. The last time there was a Golden Cross for gold was in early February 2009, and gold subsequently rose 103% in the next 2 years. Similar gains are quite possible today, given the strong fundamentals and the technicals. Were gold to replicate those gains, it could see gold rise to double of today's value, around $1,750 to over $3,500. Silver, too, saw a golden cross in late February 2009, when silver was trading at under $14 and rose 257% to over $49 in April 2011 for a 250% gain in just 2 years and 2 months. Given silver's very strong fundamentals, they could have similar gains, gold and silver, due to this golden cross, which is a technical term. I encourage you, get the newsletter from Worldwide, read about the Golden Cross, give them a call, 1-866-623-2002. But Harold, you look at the fundamentals, obviously Spain needing a bailout, geopolitical, those are fundamentals. And then on top of it, you look at the technical side, the Golden Cross, which is in place right now, is a very, very strong indicator for purchasing precious metals today and possible very, very big moves in the future.
That's for sure, Randy. You got to be very careful about the markets because these markets can get very volatile. That's why we say not to trade them in the futures market, because 90% of the people that trade futures lose their money. As far as technicals go, that's the charting, and that tells you support and resistance levels and, basically in normal type of markets, what the market is supposed to do over a short-term basis. You've got two different traders that are in the metals markets or in the commodity markets. With us, we are buy and hold. So we're not trading commodities. We're buying gold and silver as a hedge against inflation to offset, losing in stocks and other positions that will happen as a result of inflation. So again, we use the technicals to see short term which way the markets are going to go, but over the long term, the market has never ever looked better than what it does right now. And again, I think for the next 5 years, we will see these markets reach levels that nobody really thought was possible. But then again, whoever thought the gold was going to break the old $800 high and go all the way up to $1,900? We thought it would. Other analysts like John Embry did. But the fact is that we're nowhere near the top of this market in gold and silver. I believe silver will be a triple-digit investment. Right now it's in the $35 range. I believe it could end up at $200. So, again, we got a lot of room to make a lot of money, but most importantly, to hedge against inflation, which is definitely coming.
Connect with Worldwide Precious Metals. Let them educate you as to why you need an allocation of precious metals in your portfolio today. Start your own precious metals investment account. The telephone number, 1-866-623-2002, 1-866-623-2002. I remember 10 years ago when we started doing the radio show, gold was around $250. And that magical number was $500. That was the magic number. Yeah. And everyone was just like, will gold get to $500? And it got to $500. Then the next magic number was $1,000. And we were right. It did get to $1,000. The next magic number is $2,000. We came close about a year ago, close to $1,900. We came very, very close. And we believe we will hit $2,000 yet again. But now there's other numbers that some very smart people like Jim Sinclair are bringing up, and that is $3,500. We just heard mention of that with the Golden Cross, $3,500. Now, there are some other people that believe we could see $5,000 and even $10,000 gold. And it's amazing to me that here we are back when 500 was the big number, that we're now talking about $10,000 gold. And this person who's writing about it, he's not some airy-fairy guy. This guy is one of the top-notch people out there when it comes to writing about finance, and that is Ken Rogoff. He wrote a book with Carmen Reinhart, and it was a major, major bestseller about how the financial markets, it really is going to be not that much different than what's happened in the past. Now, he's written a piece in Barron's, and it's called $10,000 Gold. And it's a must-read. I really encourage you to get our newsletter and read Here Comes $10,000 Gold. Be prepared to hear more calls for this. It has never been easy to have a rational conversation about the value of gold, wrote Ken Rogoff in that piece. But with the national debt passing $16 trillion and the Federal Reserve launching unlimited quantitative easing, the gold bulls will increasingly tell you that the sum of their fears are coming true. And people are talking about potentially $10,000 gold. Now, Harold, I would be quite happy to get to $5,000 gold, and who knows, maybe we'll have that $10,000 conversation when we get to $5,000, but you can see how because of unlimited quantitative easing, it's opened up Pandora's box to the potential of these hard asset markets.
That's 100% true, but also understand that if we have $10,000 gold, understand what the state of the world economy is going to be like at that point. It would be so severe. With $10,000 gold, obviously that's reflecting massive inflation that most people won't be able to deal with. So again, the important thing is if you understand what the potential is in this market and what the potential is in the world markets, how because of stupidity and greed, the markets around the world are near catastrophic situations. I mean, look at Europe. It's falling apart financially, and countries need to be bailed out because they're on the verge of bankruptcy. This has never, ever happened before, especially with the magnitude that we're seeing now. So if the government and the Federal Reserve just keeps printing and printing and printing, which we believe they will, and we do eventually get to $5,000 to $10,000 gold, we'll be looking at 20% inflation. And the people that are not prepared for that, do not own gold, silver, diamonds, that type of thing, will be in horrendous financial positions, struggling to stay alive financially. So again, it's not what the name of the asset is or what the investment is. It's what's going to give you the biggest return with the most amount of safety. And owning physical gold and silver and diamonds is going to protect you against exactly why we're going to have $5,000 to $10,000 gold. Believe me, if you're in the markets, you're going to welcome seeing that move, because it meant that you did the right thing and you protected your assets against being eaten up by inflation, which unfortunately most people won't. So again, it's vital that you understand that $5,000 to $10,000 gold would be meaning that the world economy has got massive inflation, and we need to own the right assets to make sure that that doesn't kill us financially.
Interesting story we have in our newsletter. Graham Bibby, he is the CEO of Richmond Asset Management in Hong Kong. He believes the United States, the jobless rate actually is 16%, not 8.1%. And you can read that in our newsletter as well. But there's one story that is a must-read, and it talks about inflation. And it's one of those items that when you read it, it really opens up your eyes. In 2006, the first year that Bernanke was heading up the Fed, the average weekly earnings pre-tax of a worker in the United States could purchase 332 loaves of bread, 265 carton of eggs, 109 gallons of milk, 141 gallons of gas, and 3,170 kilowatts of electricity. Since then, the cost of those staples has soared, while incomes have barely moved, and the value of homes in the United States have obviously declined. 6 years later, the average weekly income can only buy 250 loaves of bread, negative 25%, 187 cartons of eggs, negative 30%, 101 gallons of milk, minus 7%, 94 gallons of gasoline, minus 34%, and 2,644 kilowatts of electricity, minus 17%. To add insult to injury, the cost of electricity for households has grown by 23%, while the cost of natural gas, nat gas, has fallen by 55% for producers. So they're doing quite well. But Harold, with about a minute left here, we got about 30 seconds left. This is why we're saying be in assets where you're maintaining your purchasing power. You can see we are all getting killed here.
Exactly, and that's what inflation is. And again, you have to be able to look ahead. And to do it 2 or 3 years from now is not the right move. To take your positions now, especially in silver, where silver prices are still ridiculously low, that's ultimately where you're going to end up hedging inflation. That's the most important thing. If we end up making a lot of money from this, that's what we should do, but it's going to offset your cost of living and the investments that you have that are going to lose, which are going to be in stocks. So be smart about this. Again, make sure that you're protected. If you believe in insurance, this is insurance against your financial situation plummeting. And again, if we see $5,000 to $10,000 gold, you got to realize that we have massive inflation, and you've got to be in these situations prior to that happening.
Protect yourself. Speak with Worldwide Precious Metals about investing in hard assets, gold and silver, 1-866-623-2002. The website, wwpmc.com. Speak with them about getting our newsletter and the stories we're talking about on today's show. Going to come back, talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on September 21st, 2012. Our time is 9:12 Mountain, 11:12 Eastern. Radio show runs QR 77 in Calgary, 630 CHED Edmonton, and AM 640 in Toronto. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com, also HESradio.com. We have a podcast. You can sign up through iTunes to get the podcast weekly. It's free of charge. We are portable. You can take our radio show anywhere you go. To invest in precious metals, the Company Herald recommends you use Worldwide Precious Metals. It's critical in the times that we live in that you have an allocation of hard assets, gold and silver. Speak with them, 1-866-623-2002. Their website, www.pmc.com. And for diamonds, Herald's website is rarecoloreddiamonds.com. Connect with him by phone, 1-800-432-1022. 1-800-432-1022. You can get our newsletter from either Herald or Worldwide. Our featured diamond this week, it is a stunning, stunning diamond. It's very similar to what we had last week. 0.62 carat pear-cut, fancy, vivid, purplish pink Argyle diamond. And with the Argyle diamond tender out there right now, Bloomberg did a feature, and you can watch this feature. We have a link to it in our newsletter. Rare pink diamonds are luring more Chinese buyers. It is a great, great feature. I encourage you to watch it. It's in our newsletter. Also, other articles. Diamonds are investors' best friend in tough times. That is a fantastic article. Also, the Tiffany diamond has been reset to celebrate the 175th anniversary of Tiffany & Company. They put a beautiful platinum necklace on the Tiffany diamond, which is a 287.42 carat yellow diamond, which is simply stunning. Also, Canadian, actually, it was Ryan Reynolds, who's a Canadian, got married to Blake Lively. Their wedding ring was a light pink diamond. And Stacy Keebler, who is not engaged to George Clooney, would probably like to be, she was seen this week sporting a huge diamond ring. And it was a yellow diamond ring at an event. Harold, everyone is wearing diamonds, and they're wearing colored diamonds. It's fantastic to see.
You better believe it. Again, we're so proud of the fact that we were the ones that brought this market to everybody 7 years ago. And now, over the last year to 2 years, the media has picked up on how important an asset like rare colored diamonds is. You know, they have a track record. They're one of the best investments you could make under normal circumstance because they're not affected by any other markets except for supply and demand. There are so few colored diamonds available that are of gem quality that, again, these assets have never, ever dropped in price. So it's not like buying commodities or stocks on the market that trade on exchanges that go up and down in value. That's not the way diamonds work. Rare colored diamonds like yellow flawlesses, Argyle pinks, red diamonds, blue diamonds, they've got track records. They go up tremendously based on the fact that there's hardly any around. You have to mine 100,000 carats of white diamonds just to find one colored diamond. The rarest of all diamonds are red diamonds. Red diamonds are so rare that a 1 carat red diamond, if you compare it to a 1 carat white diamond of normal, color and clarity, you could buy a 1 carat white diamond for maybe $5,000 to $10,000. A 1 carat red diamond, if you could ever get one, is over $2.5 million. So that'll put things into proper perspective. The fact is that colored diamonds are that price because they're so rare, and again, they're great investments that never ever go down in value. But we've got some unusual situations that make them look even better at this particular point. Number one, when you look at investments and what an investment is going to do for you down the road, many of my clients all over the years, I've been in business 35 years, have bought diamonds for retirement because yellow flawless diamonds, as an example, go up by 25% a year. They double every 4 years in price. So a diamond that you can buy for $20,000 in 10 years from now will be worth about $100,000. That's what these diamonds have done. But because we're talking about inflation, do you know that in 1979 and 80, the last time we had massive inflation, similar to what we're going through at this point, gold went to 850, silver went to 50, but colored diamonds went up 500% in 2 years. 500%. In 2 years. We'd be lucky to make 10% on our money in 2 years in normal markets. To pick up 500% because of inflation and shortages. That's why the diamond market is so important. Other reasons is that they're portable private wealth. Most of us do not ever believe that no matter what the state of the world economy gets, we're not going to have to leave our homes. We're not going to have to leave our countries. But the bottom line is that this is the only form of portable financial wealth that you have. If you ever had to leave, This is the type of asset that can go right into your pocket type of thing, and you're carrying real estate in your pocket. You could buy a diamond for $1 million, $5 million, $10, $20, $50 million and carry it in your pocket, and nobody would even know that you have it. So the bottom line is that that's what diamonds have always been, portable private wealth. The reason that we're recommending it is because of a hedge against inflation. They never go down in value. They respond to inflation tremendously, and they are absolutely gorgeous to look at. To own a yellow diamond, Randy was talking about, large yellow diamonds. I can assure you that very few people in the world have ever seen a 30-carat fancy intense yellow flawless diamond that we own for about $1.6 million, that if you were in New York looking for a diamond like that, you would pay 3 times the price for it. That's a diamond that will double in price every few years because it's so rare, and there's very, very few diamonds anywhere close to that size. So the bottom line is right now, we're looking at 3 major assets, 4 actually major assets that you should own. Gold and silver physically, where you're not trading it on the exchanges and leveraging it heavily. And number 2, the diamond market. The rare colored diamond market will respond to inflation with no risk. These diamonds never, ever fall in price. In all of the years that I've been in business, because there's so few of them, they are phenomenal assets. In fact, they're so safe that these are the type of assets that I gave to my children when they were growing up. And now that I have 3 grandchildren, they all own yellow flawless diamonds put away for their future. Now, with the inflation that we're anticipating and the fact that maybe for the entire world, there's 100 yellow flawless diamonds available. If you look on our website, rarecoloreddiamonds.com, we own most of them. It's something that I believe in tremendously. It's where I put most of my money is into the diamond market because it's safe and it increases substantially over the time. In fact, by the end of the year, we will see a large price increase in yellow flawless and argyle pink diamonds. So if you are going to invest, and we very strongly recommend you do, because, again, this is an asset that can help you tremendously with your hedge against inflation and make money for the future. Now, understand, this is not a short-term investment. You don't buy a diamond today and sell it a year from now. You will not make any money with it. But in 5 years, if we're right on this inflationary thing, a $20,000 diamond can turn to be $100,000. Now, it's one thing to own the diamond. It's another thing to sell it. What do you do when you want to resell your diamond? If you're buying diamonds from other brokers or dealers, you're going to have to deal with them and see what they're possibly going to be able to do for you. We take our business extremely seriously. And 2 years ago, I set out to build a secondary market to resell high-end collectibles. It's never, ever existed before. So we built 8 Siegel Fine Auctions. And 8 Siegel Fine Auctions is the only real-time live auction site for the Internet. It's not like an eBay type of site or any of these other sites where, you go on and you place a bid and in 2 or 3 days you find out if you won or if you sold or whatever. With my site, we hold live auctions on the Internet selling the highest-end collectibles and diamonds that you could possibly imagine. We sell gold and silver coin sets. We sell emeralds, rubies, and sapphires. We sold Oprah Winfrey's pink diamond necklace for 7 times what they expected to get back for it, and we sold recently a diamond for $150,000 on our site. So again, I'm very proud of this. We put a fortune of money into it, and we take our business very, very seriously. Again, it's one thing to go out and invest in diamonds. It's another thing to be able to resell them, and that's always been the problem with the diamond market in the past. We realized that, and we set out to build 8 Siegel Fine Auctions. Those auctions will resume the end of October. We'll certainly let you know. Get your name on our mailing list for that. We will send you the dates that we're holding our auctions. It's so exciting and so much fun, and so many amazing pieces are being sold. And by the way, like I said before, it's not a boring auction like eBay where you just, type in your bid. I sell every single piece. So when you're a client of mine and you buy a diamond through us or invest in a diamond through us, we ship the diamond directly to you. We pay for the shipping, the insurance, and the duty coming into Canada. We send you our newsletters each week. We send you auction results. And when the time comes to sell your diamond, we are the only company that can do that for you. Now, this is a brand new business. It only has been in operation a year. Like I said, it took us 2 years to build it, and we're extremely proud of it. Now, very few of our clients are reselling their diamonds at this point. The next 5 to 10 years is when we anticipate making a lot of money in the diamond market. So now's an excellent time to do it. We specialize in yellow flawless diamonds. They increase by 25% a year. They double every 4 years, and during times of high inflation, they've gone up 500% in 2 years in 1979 and 80. We expect the same type of returns. That means a $20,000 yellow flawless diamond could turn out to be $100,000 in the next 5 years if we get the high inflation that we're looking for. The other diamonds that we recommend very, very highly are Argyle pinks. You're going to hear a lot about the pink diamond market, but 95% of the pink diamonds in the world come from the Argyle mine in Australia. It's a mine that's been in production since 1985, and it's going to close within the next 5 to 6 years. There's very few pink diamonds coming out of the mine at this point. The prices on these diamonds can skyrocket, and we expect in the next 6 years that the price of Argyle pinks can go up 10 times what today's prices are. Means if you can afford to invest in the pink diamond market and you buy a $50,000 pink, that diamond could be $400,000 to $500,000 in the next 6, 7, 8 years. So again, we recommend those diamonds tremendously. Very few pink diamonds come out of the Argyle mine, and that represents 95% of the world's pink diamonds. It's in the news every day now. The Argyle tender is going on. What that means is that Argyle takes 55 to 60 of their top pink diamonds and take them on display to 6 different cities around the world, and us high-end dealers get to bid privately and only one bid on each diamond. These diamonds sell for a fortune. They are the best of the best. They are the most beautiful diamonds you could ever possibly lay your eyes on, and they're one of the best investments you could make. If you go on my website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, go to the loose diamond section, you're going to see all the colors that we carry. We carry the yellow flawlesses. Go to those. We carry the 4 best colors, fancy light yellow, fancy intense, and fancy vivid. And by the way, they're all flawless diamonds, which you need. They have to be flawless yellows in order to make the returns that we're talking about. You're going to see close to 100 diamonds on the website. That represents an entire year's supply for the entire world, and those diamonds are available only to my clients. The Argyle pinks, the same situation. The hardest diamonds in the world to get right now are high-quality Argyle pinks, especially the larger ones like we carry, and those are the diamonds that will absolutely skyrocket in price. You could see 10 times your money back. Also, even though we specialize in colored diamonds, we do carry the rarest white diamonds in the world. They're called D-Flawless XXX whites. They're excellent in every category. Last year, these diamonds went up 45%. 45% in 1 year. They're amongst the best investment diamonds you can get. They start in and around the $10,000 level and go up from there. A 1 carat can go for $80,000 to $100,000, 10 times what the price of a normal white diamond will go for. But again, these are the best of the best, and they go up the most in value. Please go to our website, rarecoloreddiamonds.com. Sign up for our free newsletter. We send out our diamond newsletter every month free of charge. We send out the World Financial Report free of charge every week. And we hold our auctions starting again at the end of October. We're going to try to have at least 1 or 2 a month, and you're going to flip out when you see how amazing these assets are and how much fun it is to participate in Rare Colored Diamonds auctions. So, again, get geared up for what's going to happen. We're going to see the highest inflation we've ever seen. The world is falling apart financially. This is the time you need to be in the hard asset market. Go to my website, rarecoloreddiamonds.com. It's like going to a museum. Some of the most beautiful pieces you've ever seen. We have diamonds starting at $10,000 and going all the way up to over $50 million. So again, most of our clients that invest under $100,000. You could buy a $15,000 fancy light yellow internally flawless diamond and be in profits in that diamond going into the early part of the year. That's how much these diamonds go up. So again, with what's coming up, to hold a diamond in your possession like this, or put it into a beautiful ring if you have a big anniversary or birthday coming up, what would be better than to surprise your wife with a magnificent pink or yellow diamond ring, and we make the most beautiful you've ever seen, and let her, enjoy it and then wear it. And if she wants to sell that diamond down the road, we would sell that on our auction site, or in a lot of cases are handed down from generation to generation. It's one of the most exciting assets you could ever own. Get the newsletter this week. There's tremendous reports, including one that's saying, in these particular times, rare colored diamonds are the best investment you can make, and I agree with that, along with physical gold and silver.
Speak with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com, or connect with him, 1-800-432-1022, 1-800-432-1022. Speak with him about the featured diamond. 0.62 carat, pear cut, fancy, vivid, purplish pink Argyle diamond. The Argyle tender is on right now, and you don't have to wait. You can get at a wholesale price that pink Argyle diamond from rarecoloreddiamonds.com. Speak with Harold about it. You can see the video via our newsletter or go to the website. It is under the featured diamond of the week. You can't miss it. It is simply stunning. And I would get our newsletter this week from Harold, because we have that Bloomberg feature on rare pink diamonds being of great interest to Chinese buyers. And when Harold was talking about museum pieces, he is right on. This is nature's art. Diamonds, colored diamonds, are nature's art. The way you would see a Picasso, a Van Gogh, this is nature's art. In fact, the Argyle mine, they found a huge pink diamond about a year ago. They realized they couldn't cut it and have it go into jewelry or a ring. They donated it to a museum. It is on display in a museum, and that goes the same for the Hope diamond, or the diamond we talked about earlier, the Tiffany diamond. Those are on display in museums. Have your own museum piece. You can get it via rarecoloreddiamonds.com. But Harold, I get excited when I see major outlets like Bloomberg doing features on pink diamonds, and how the allure is over in China, people buying these diamonds not only as investments, but something to show off and wear.
You bet. Well, China's also very smart, and they're buying gold physically. They're buying diamonds. The fact is that we have so many clients now from Europe because of the currency situation. The euro, no matter how much trouble the euro's in, it's still higher, 30% higher than the U.S. dollar. We have so many clients in Spain and Italy and Portugal and England and all over Europe that are converting their currency because they're so concerned that the euro won't be here anymore, and putting it into diamonds, because diamonds can be sold in Chinese yuans, Japanese yens, British pounds, euros, American or Canadian dollars. So again, depending on what the currency market is, it's not only a great hedge against inflation, but we could sell it in another currency. In fact, we're finding that a lot of our fabulous European clients are taking advantage of the markets because the British pound is worth 40% more than the U.S. dollar. And because diamonds, right now, because I'm a Canadian living in the States, are priced in U.S. dollars. Even right now, converting your Canadian dollars to U.S. to buy one of our diamonds, you're saving 3% just on the currency exchange alone. So it's a phenomenal situation. And again, we're very aware of the currency markets. It's one of the markets that I'm best at trading. And again, I know when to sell in different currencies and what's happening with the U.S. and Canadian dollars. So it's one of the better investments that we've ever recommended. It's a very safe investment that never, ever goes down in value, but you could see tremendous increases. And now that the world is becoming more aware of it, rare colored diamonds, let's face it, is not for everybody. The minimum investment is $10,000 to $15,000, and not everybody has that type of money. Along with the fact, no matter how good an investment is, you don't want to put all of your money into one asset. So you've got to be diversified. I'm not saying to put all of your money into the diamond market or into the gold market. I'm saying have 20, 25, 30% of your assets at this point in hard assets, maybe a little bit more. I would definitely lighten up on the stock markets because of the potential of a big crash in the market by the end of the year when the Bush tax credits run out. So again, you've got to be smart about what's going on. This is not the 90s anymore when every stock went up and real estate was skyrocketing. These are the most dangerous financial times we've ever seen. And sometimes these type of times brings on different measures. You have to look at other investments and do some research in order to understand why certain markets do certain things. And because this quantitative easing is such a massive phenomenon where close to $1 trillion or more is going to be printed and put back into the U.S. marketplace, the fact is that if it's not creating new jobs and if it's not making the economy stronger, that's $1 trillion lost. But imagine printing all that money and what inflation it's going to bring. So again, the diamond market, I wrote a report 7 or 8 years ago called Rare Colored Diamonds, the Best Kept Secret, but it's no longer the best kept secret because now Bloomberg and all the major publications are writing major articles on rare colored diamonds. We knew that this was coming. I've geared up my business for this. Again, there are only certain diamonds that do extremely well, and I own most of them. The yellow flawless diamond market, all you have to do is go onto my website and compare it to what anybody else in the world has, and you're going to see that I own 80% or more of the yellow flawless diamonds. And if that's not putting your money where your mouth is, I don't know what is. Again, other companies, if they do get 1 or 2 of them, 5 or 10, it's a really big deal. Look on my website and look at the most beautiful videos. That's the other thing. We don't have still pictures. We film every one of our diamonds. So when you look at on our website and click onto one of our videos of our diamonds, this diamond turns 360 degrees. You see the GIA reports. You see the diamond in all its splendor. And again, we ship the diamond to you. We pay all the expenses. And when the time comes to sell it, we are the only company that can resell your diamonds for you. I'm extremely proud of what we've built in the diamond business. But again, I knew that this was happening, and I geared my business for this. Who else would have gone out and built a live auction business if he didn't care about his clients? It's one thing to sell somebody a diamond and then leave it up to them to resell it on their own. We didn't do that. We put fortunes into our business to make sure that our clients do better than anybody else out there.
One thing that Harold brought up is, debasement, and diamonds, gold, silver cannot be debased. You cannot print the way the Fed is in the United States, and even the EU is printing money. Let's face it, where's the bailout money going to come from for Spain? They're going to print it. They don't have it. That was the case for the other bailouts that have happened already. Be in an asset that is going to maintain its value and grow and cannot be printed away to infinity. RareColoredDiamonds.com, featured Diamond of the Week. Speak with Harold about it. RareColoredDiamonds.com. Telephone number 1-800-432-1022, 1-800-432-1022. On the precious metal side of things, the company Harold recommends you use is Worldwide Precious Metals. Connect with them. WWPMC.com, WWPMC.com. Their telephone number 1-866-623-2002. We have about 3 minutes left in our show. One story I wanted to get to before the end. Egon von Greyers out of Switzerland. He expects silver to surge 433% from current levels. He says, I've been saying gold and silver, due to the fundamental and technical factors, will go up dramatically, especially in this autumn and next year. So this would happen anyway, with or without QE, in his opinion, but QE was just a catalyst. It had to happen and will continue to happen, whatever the politicians say or do. So the targets, and this is something that is going to surprise a lot of people, he is actually expecting that we could hit $4,000 or $5,000 gold and $150 on silver. That is 433% from where we are currently, and he actually thinks this could actually happen in the next 12 months. That is an article that you must read. It is in our newsletter. Get our free weekly newsletter from Harold, RareColoredDiamonds.com, or 1-800-432-1022, or speak with Worldwide, 1-866-623-2002, their website, WWPMC.com. Harold, a lot of obviously very optimistic predictions on hard assets, but the truth of the matter is, even if it goes even to half of that, people are going to make some good money at the same time having that insurance policy in their portfolio, which is so important during the times that we live in. We have about a minute left here.
In this world that we live in right now, with real estate markets suspect and again dangerous at high levels, we saw it happen in the United States with the potential of massive inflation. We just need to do the right thing. And it's not only about making money, it's about protection right now. Protection is first and foremost. And again, if you own the right assets and we're correct about inflation, you're going to cover what inflation is going to eat away from your assets. And again, if we do this correctly, we're going to come out of this doing extremely well. As I've always said, 90% of the money is made by 10% of the people, and all we want is for the listeners to our radio show to be in that 10%. Again, I appreciate you listening to our show for 11 years. Randy and I really put a lot into this, and we appreciate your patronage for all this time and your loyalty. I want to wish everybody a wonderful weekend and a very, very profitable day.
Thank you very much, Harold Siegel, and you can connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022, also hsfineauctions.com, and on the precious metal side of things, wwpmc.com. The website, 1-866-623-2002 to connect with worldwide precious metals, 1-866-623-2002 or wwpmc.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.